Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin reclaims critical resistance levels today, crossing $72,900, while Ethereum trades at $2,138. This rally follows regulatory breakthroughs and infrastructure developments reshaping how traditional finance interacts with digital assets. Kraken just became the first cryptocurrency exchange to secure a Federal Reserve master account. Kraken Financial now has direct access to the Fed's payment systems, settling dollars without intermediary banks. The Kansas City Fed approved this skinny master account with limitations including no interest on reserves and operational caps. For years, crypto firms were pushed offshore or relied on banking partners who could cut them off. This approval signals digital assets are becoming part of core financial infrastructure. Traditional banking groups are furious. The Independent Community Bankers of America and Bank Policy Institute, representing J.P. Morgan, Bank of America, and Wells Fargo, called the move improper and dangerous. They claim the Fed is front-running its approval process since the skinny master account framework was only proposed in December 2025. President Trump accused big banks of holding crypto legislation hostage to protect their deposit monopolies. That brings us to the Clarity Act. Trump urged Congress to pass this stablecoin regulation bill stalled in the Senate Banking Committee. The fight centers on whether stablecoin issuers can offer yield. Crypto firms argue consumers should earn 4 to 5% returns, while banks say that would drain $6.6 trillion from the banking system. J.P. Morgan CEO Jamie Dimon insists any entity paying interest should be regulated as a bank. Trump met privately with Coinbase CEO Brian Armstrong before slamming banks on social media, and Coinbase stock surged past $200. The SEC submitted its own proposal outlining how securities laws could apply to certain crypto assets, showing the agency is willing to act without waiting for Congress. U.S. spot Bitcoin ETFs pulled in $1.7 billion since late February, reversing months of outflows. Nearly $700 million came in just this week. Bitcoin's weekly RSI hit 26.84, levels not seen since the FTX collapse in 2022. When positioning gets this bearish, reversals often follow. Ethereum co-founder Vitalik Buterin published scaling plans for the base layer. Near-term improvements include parallel block processing and the ePBS upgrade. Longer-term, Ethereum will transition to advanced cryptography and rethink gas fee calculations. Buterin emphasized Ethereum's role as a trust layer for AI. Chamath Palihapitiya questioned Bitcoin's suitability as a central bank reserve asset, citing privacy and fungibility issues. Ray Dalio echoed similar skepticism, pointing to Bitcoin's lack of central bank backing and quantum computing risks. Crypto bulls argue these concerns are already priced in. Bitcoin held strong above $70,000 even as Middle East conflict escalated. South Korea's stock market collapsed nearly 20% this week, but Bitcoin diverged sharply higher, suggesting crypto is decoupling from traditional risk correlations. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.